Welcome back to the Deep Dive, where we tear open the source material so you don't have to.
Hello again.
Today, we're taking a high-altitude look at some really interesting corporate strategy. Our mission is, well, pretty specific. We're focusing only on the CEO's opening remarks from Visa's fiscal full year 2025 earnings call.
Right, so no deep dive into the quarterly numbers themselves.
Exactly. We want to dissect the strategic vision, how they see the future shaping up.
And it's quite a vision. The core theme, really, is that Visa sees itself evolving into what the CEO actually called a hyperscaler.
A hyperscaler, like the big cloud companies.
Sort of, yeah. But for money movement, the idea is enabling anyone in that business to plug into and build on top of their own platform. They call it the Visa as a service stack.
Okay, Visa as a service stack. That definitely frames it differently than just a card network. Hyperscaler implies massive scale and enabling others.
And they certainly have the foundation for it. I mean, just to set the stage quickly, the performance is strong. Full year net revenue was up 11% year over year.
And EPS grew 14%. You need that kind of performance to fuel big ambitions.
Absolutely. And the scale's there, too. Total payments volume for the full year hit $14 trillion.
$14 trillion. Wow.
Yeah, up 8% in constant dollars. And they process 258 billion transactions, which is up 10%. These numbers, they're not just financials, they're like the proof points for this whole strategy.
Right, the foundation. So let's follow their structure. The CEO laid out 4 layers to this stack. We should probably start at the bottom. Layer 1.
Makes sense. Layer 1 is the foundation layer, basically, global connectivity.
The network of networks, as they put it. What does that actually mean in terms of expansion?
Well, they talked about 3 main ways it's growing. First is just raw scale, more connection points. They're now at approximately 12 billion endpoints globally.
12 billion. And how does that break down?
This part's interesting. It's roughly 4 billion cards, 4 billion bank accounts, and 4 billion digital wallets.
Huh. 4, 4, and 4. That seems very balanced. Almost too balanced. Is that telling us something?
I think it highlights a very deliberate strategy. They're not just about cards anymore. It's about the account, you know? Doesn't matter if it's plastic or an app or a direct bank connection. They want to capture the transaction.
Okay, so endpoint diversification. What's the second expansion point? This one seemed to lean into the newer digital asset space.
Exactly. They're adding support for 4 specific stablecoins. These run on 4 unique blockchains and represent 2 different fiat currencies.
And the key is that merchants or partners can accept these stablecoins but get paid out quickly in regular money.
Precisely. They can be accepted and then converted into, I think it was, over 25 traditional fiat currencies. It's about bridging those worlds, offering faster settlement options, especially cross-border.
Makes sense.
Yeah.
And the third point for layer 1, this sounded like a big internal tech overall.
Oh, it is. It's the deployment of the next generation of VisaNet, their core processing platform.
Okay, technical terms coming.
Haha, yeah. It features a cloud-ready, microservices-based, distributed, modular architecture.
Right. So basically, more modern, flexible, and scalable. Faster to update, easier to grow.
That's the gist. It lets them deploy new stuff much faster and scale globally with more agility. But here's a really interesting nugget they dropped in.
Go on.
Over half of the new code base for this next-gen VisaNet was built with assistance from generative AI.
Okay, wait. Over half. Why call that out specifically? Faster coding is good, obviously. But why is that strategically important?
Because it signals a fundamental shift in how they operate, I think. Using Gen AI at that scale isn't just about speed. It's about embedding modern security practices from the start, making the code more maintainable, and, frankly, defining their future IP differently.
So less reliance on purely human coding cycles for the foundational stuff.
Yeah, it sets them up for much more rapid, continuous improvement. That's a hallmark of, well, a hyperscaler, right?
Right. Okay, that lays a very strong foundation. Let's move up the stack then. Layer 2, the services layer.
This is where they take those core capabilities, things like credentials, tokens, authentication, risk management, and break them down into modular services people can use.
Like building blocks. So starting with credentials, just the cards and account numbers themselves?
Essentially, yes. They grew credentials by 270 million this past year. And the strategy seems twofold. Lock down the big long-term relationships, but also grab new high-growth opportunities.
We saw that lockdown part with the Barclays renewal, right? Almost 60 years they've been partners in the UK and US.
Exactly. Huge sign of trust. But then you also see the competitive wins, like getting the exclusive deal for the Southwest Airlines co-brand program, and notably expanding that into co-brand debit, too.
And pushing into new areas.
Definitely. They won the Scotiabank Wealth Management credit card issuance across 7 countries in Latin America. That's the premium Visa Infinite product. Plus, renewing with China Merchants Bank and helping them upgrade from old magstripe cards to contactless chip cards. It's modernization everywhere.
That modernization push connects directly to tokens, doesn't it? The numbers there were kind of staggering.
They really were. Over 16 billion Visa tokens are now out there. That's up from 10 billion just back in May.
16 billion. And the goal is what?
The stated goal is 100% of e-commerce transactions eventually being tokenized.
100%.
Yeah.
Why so aggressive? What's the core driver?
Security, fundamentally. Think about it. A raw card number is like your permanent house key. If it gets stolen, the thief has ongoing access. A Visa token is more like a single-use digital key fob issued just for that specific purchase on that device. If it gets intercepted, it's basically useless anywhere else.
So they're trying to force the entire ecosystem towards that higher security standard.
That's the push, and it seems to be working, which leads us to their fraud prevention tech. That Visa scam disruption capability sounded quite effective.
Yeah, tell us about that.
So this uses AI, obviously, to enhance how they monitor merchant activity, and they combine that with external intelligence feeds. The results they quoted were pretty impressive.
Which were?
In just the year since launch, they've apparently dismantled more than 25,000 scam merchants. These weren't small operations either. They represented over $1 billion in potential fraud attempts that were stopped.
$1 billion in prevented fraud just from that one capability. That's a huge selling point for keeping clients on the network.
Absolutely. It's ecosystem protection. And they're applying similar intelligence in the digital asset space, too. We mentioned stablecoin settlement in Layer 1.
Right, the plumbing.
Layer 2 is providing the actual tools and services around it. Since 2020, they said they've facilitated over $140 billion in crypto and stablecoin flows.
That's a significant volume.
It is, and it's accelerating. They have over 130 stablecoin-linked card programs now in more than 40 countries, and card spending on those quadrupled year over year in Q4. The monthly volume passed a $2.5 billion annualized run rate.
So real usage is picking up. Are they building more infrastructure too?
Yes, that's key. They launched a new capability allowing banks to mint and burn their own stablecoins using something called the Visa Tokenized Asset Platform.
Interesting. So banks can create their own branded stablecoins on Visa rails.
Seems like it. And they're piloting Visa Direct, their real-time payment network for banks to use stablecoins for faster pre-funding and liquidity management. They're trying to be the essential bridge, between traditional finance and these new digital assets.
Okay, layer 2 is packed. Let's move up to layer 3, the solutions layer. This is where those services get packaged into actual features or products clients buy.
Correct. And the really big strategic narrative here from the CEO was around defining what they see as the third great wave of commerce.
After e-commerce and mobile commerce.
Comes agentic commerce. That was the term.
Agentic commerce. Meaning?
Simply put, it's about autonomous AI systems, agents making purchases without a human directly clicking buy.
Okay, my AI assistant orders groceries for me without me intervening. That raises immediate trust and security questions, doesn't it? How do you know the agent is legitimate?
Exactly the problem Visa wants to solve. They're positioning themselves to set the rules here. They launched something called Visa Intelligent Commerce, which blends their token tech with predictive analytics. And get this. They said they are already powering live agentic transactions.
Live? Wow. Okay, so how are they tackling the trust issue?
They released the Visa Trusted Agent Protocol. It's basically a framework to help merchants verify that an incoming agent is legitimate and not some malicious bot trying to commit fraud.
And how easy is it for merchants to adopt this new protocol?
Yep.
Because adoption is key for any new standard.
That's the smart part. They apparently built it on existing messaging standards. So the idea is it requires minimal integration effort. Make it easy and people will use it.
Very strategic. Okay, shifting from AI agents back to humans for a moment. The Visa Flex credential seems to be getting a lot of traction.
Huge traction. Flex lets a consumer link multiple funding sources, maybe a credit line, a debit account, a buy now, pay later option to a single tokenized credential like a card.
And they can choose which funding source to use at the point of sale.
That's the idea. And the Klarna card launch in the U.S. was a big proof point. Over 1 million signups in less than 3 months.
1 million in 3 months is fast.
Very. And they said the pipeline is strong. 20-plus clients signed up across 20-plus countries ready to launch Flex. But while they're hitting that sophisticated digital user, they're also going after the other end of the spectrum.
The unbanked or underbanked. the informal economy.
Exactly, with the Visa Accept solution.
Tell us how that works on the ground. What does a small seller need?
It's pretty cool, actually. It lets even the smallest street vendor, maybe, accept card payments using just their existing Visa debit card and a standard NFC-capable smartphone.
So the seller's phone becomes the payment terminal. No extra hardware needed.
That's it. Tap-to-phone technology, essentially. They used Sri Lanka as an example, a potential market of 7 million informal sellers they could bring onto the network this way.
7 million in just one country. That's transformative potential.
Huge potential, and they're targeting launches in 25 countries soon.
And this shift towards just tapping phones or cards is showing up in the overall data too, right? The tap-to-everything numbers.
Yeah, they highlighted that 79% of all face-to-face Visa transactions globally are now contactless taps. That's up 8 percentage points just this year. The U.S. is catching up too at 66%.
And tap-to-phone, the tech behind Visa Accept, is growing.
Massively. It passed 20 million active transacting devices worldwide. That's more than double where it was last year. Habits are changing really fast.
Clearly. Okay, let's shift gears within Layer 3. What about commercial and money movement solutions, or CMS?
Still a huge area. Full-year commercial payments volume grew 7% in constant dollars, hitting $1.8 trillion.
Trillion with a T. Any specific wins they called out?
Yeah, they mentioned supporting Chase with the launch of the Chase Sapphire Reserve for Business, that's a premium product, and partnering with Truist for their business premium Visa Infinite card. Notably, Truist was the first super regional bank to launch that specific high-end Visa product.
So wins in the premium business segment. What about globally or in travel?
They won Trip.com's global virtual travel card issuing business using their TripLink platform. And they gave an interesting example from India.
Oh, yeah.
India SMB cards, small and medium business cards, have apparently doubled since 2020, now over 10 million. Globally, they have 340 million commercial cards out there.
Wow. But the real engine for a lot of the money movement growth seems to be Visa Direct, their real-time push payment network.
Absolutely. Visa Direct transactions just keep soaring. They hit 12.6 billion transactions this year.
Up how much?
Up 27% year over year. The expansion into new corridors and use cases is constant. They mention wins like KCB in East Africa, enabling payments across 8 countries.
Okay.
Also, Touch and Go e-wallet in Malaysia that reaches 24 million users, and Al Rashi Bank in Saudi Arabia. Plus, they renewed a key deal in Peru, ensuring interoperability between the 2 big mobile wallets there, Yape and Plin.
So Visa Direct is becoming crucial plumbing for domestic and cross-border P2P, B2C, G2C payments.
Got it.
Final piece of Layer 3, value-added services, VAS.
Right. This is where they sell services beyond just processing the payment, things like data analytics, risk tools, consulting, often leveraging their network intelligence.
And crucially, sometimes selling these services even for non-Visa transactions, right?
Yeah.
Making them network agnostic.
That's a key point. They gave the example of Banco Diners in Ecuador deploying Visa Advanced Authorization, their AI-powered risk scoring engine. That engine looks at 400 different data attributes per transaction, and Banco Diners is using it to score both Visa and non-Visa transactions passing through their systems. They're monetizing the intelligence itself.
That's smart. And there was that pilot in Brazil using a similar risk service for their instant payment system, Pix.
Yeah, Visa Protect for A2A, account-to-account payments. The pilot results were pretty staggering. Over 6 months, they scored nearly $500 billion worth of Pix volume for a partner bank.
$500 billion scored.
Oh.
And the result?
They identified over $90 million in fraud that likely could have been prevented. That translates to an over 80% detection rate on that specific type of fraud within the Pix system.
80% detection on $90 million. That's serious value for the bank.
Exactly. It proves these VAS offerings aren't just add-ons, they're major potential revenue drivers built on unique data insights. On top of risk, their advisory arm estimated it helped clients generate over $6.5 billion in incremental revenue through almost 4,500 consulting engagements.
So tangible results from consulting. And they even loop marketing into VAS.
Seems so. They flagged their big sponsorships, FIFA World Cup 2026, the Winter Olympics in Italy. But they also mentioned using generative AI tools for their first large-scale campaign with Intesa Sanpaolo around a ski race. It shows they're applying these new techs across the board.
Okay, we've climbed through 3 pretty dense layers. That brings us to the top.
Layer 4.
The access layer.
The final piece. This is basically the front door, the client entry point to everything we just talked about.
And this layer is really the proof point for that hyperscaler or platform idea?
I think so, yeah. The metric they used to show reliance was API calls. Over 700 billion API calls were made to the Visa platform across more than 3,700 different API endpoints just in fiscal year 2025.
700 billion. That volume tells you that developers, fintechs, banks, they're actively building their businesses on top of Visa's services.
It's deep integration. And just like they're setting protocols for agentic commerce transactions down in Layer 3.
They're building the developer gateway for AI in Layer 4.
Exactly. They recently launched something called the Model Context Protocol Server, or MCP server.
Okay, what does that do?
It's designed specifically to give external AI systems a way to interface directly and securely with those Visa Intelligent Commerce APIs we mentioned earlier.
So it's the bridge allowing third-party AI agents to talk to Visa's agentic commerce systems.
That's the idea. So the ultimate takeaway from this whole 4-layer stack, finishing with the access layer, is what the CEO said. It allows anyone, could be a tiny startup, a big tech partner, a global bank, to tap into Visa's infrastructure, build on top of it, and operate at global scale almost instantly.
Okay, that's a comprehensive picture of the strategy. So pulling it all together, what does this really mean for you, the listener, trying to understand where payments are heading?
Well, the CEO's own summary was pretty clear. This intense focus on innovation across all these layers is delivering results now, but more importantly, it's positioning Visa to, in their view, lead the next big transformation in payments as all these different technologies, AI, crypto, real-time networks converge.
So the long-term play here, it's not just about processing today's transactions faster or safer.
No, I think the real implication is they're actively trying to engineer the future rails of commerce. Those things we talked about, the Visa Trusted Agent Protocol for verifying AI agents, the MCP server for AI systems to access APIs, they're trying to define the fundamental operating standards for agentic commerce before it becomes mainstream, just like they did for e-commerce and mobile.
Setting the standards so they become the default.
Yeah.
That's a powerful position. Which, I guess, brings us to our final provocative thought for you to mull over. The CEO specifically talked about that ultimate promise of agentic commerce, AI agents making purchases entirely without human intervention. Now, given that Visa's scam disruption capability caught over $1 billion in attempted fraud in our current largely human-driven world just this past year, how incredibly robust and fast-scaling will those underlying security protocols, like the Trusted Agent Protocol, need to be before truly autonomous AI-driven purchasing becomes the market standard, something we all trust implicitly? It feels like trust itself becomes the absolute critical currency in that future.
That is the critical question, isn't it? How do you scale trust at the speed of AI? Something the entire industry will be grappling with.
Indeed. Well, thank you for joining us for this deep dive.
Thanks for having me.
We'll see you next time.